This is our Forex blog for November 21st, 2012. And like we do most days, we use our currency meter, which compares every currency to every other one on multiple time frames using multiple tools. Some of them measure the direction that the dollar and the yen for these two examples are going versus all the rest. Some of them measure the statistical intensity, and our new build your own trend also measures the daily, weekly, monthly statistical trend and averages it all together in one very easy to read indicator. So clearly you can see the yen was extremely weak today, the euro was strong, the pound was strong, the Swiss was strong, the CAD was strong. And so basically all those currencies you're looking to buy against the yen. I'm going to do the major part of our blog video today going over the euro dollar, but I just want to show the euro yen up, Swiss yen up, CAD yen up, pound yen up, and basically there's two entry methods. Once you identify one that's strong, one that's weak, you're basically looking for a decent sized pullback or a half an hour to hour and a half breakout rectangle. And I would continue to trade with the trend until it goes above the 2.0 containment band, which I'll add on here just so you can see what it does. Typically the white 2.0 band, and I always use the DSP band because they tend to be farther away. You can look to buy this, but you really wouldn't want to buy too much above the white band. When it starts getting, anywhere from 15 to 25 pips above the 2.0 band, typically you're going to get a reversal. Fib targets, when they are outside of the band, the 2.0 band, tend to be very high probability profit targets. And if you know that ahead of time, you can use those for, exits. So if you bought this little pullback right here, again, because this area is way above the upper band, it's very likely to be the end of the move. And you can also start to scale into counter trend trades, especially after three waves up. First wave up, second, third. From really the fourth to fifth wave up, very high probability place to do counter trend, and you can see this fell from 58 all the way down to 08. So, 50 pip counter trend move. Let me put this back here. And typically when the market's gone too much, it will retrace at least 38% of the whole move. So draw your fib on here. Typically this is going to be a good profit target, but it came down, went up, came down again, made a slightly lower low, and that was the end of it. It didn't hit the 38% retracement in this case. Let's look at the euro yen, which is even stronger. This was the first real wave up. Nice little perfect example of a sideways rectangle pattern. It went sideways here for almost an hour and 10 minutes. Then you got this nice little pullback. And again, I wouldn't buy above the upper band, but if you get a pullback that's really close to the band and it was significantly above it, very high probability place to buy. And again, the fib target, especially when it's above the band, is a great place to do a counter trend trade. And if you miss the trend up, you can do a counter trend trade up here. I scale in progressively myself, so I might do, for example's sake, one lot. If it goes halfway in between there, I might add 2 lots. If it hits this, I might do 3 lots. And that pretty much puts my average position just a few pips off the high. If it pulls back 3 or 4 pips, I'm usually at break even. If it doesn't continue, pulls back 10 or 15 pips, I got a really nice trade. So let me bring up the euro dollar now. We'll go over that. As you can see by looking at the euro dollar today, it found the low, which is the weekly point of control, or I'm sorry, the weekly value area high from last week. Major area support, found that, and you can notice the bigger the triangles, the higher the probability of the buy and the sell. The smaller ones, a little bit lower probability. Counter trend trades are circles, and lower probability counter trend trades show up as gray circles. Scroll back, and if you see a gray circle, it's a low probability counter trend trade. The colored ones are much higher probability. That being the case, many times the gray counter trend signals are very high probability, just being they're lower probability than the circle ones. Usually the circle ones show up. You can start to look for fib targets. For instance, when you saw this last night, if you drew your fib off that last little wave from here to here, you can usually start to scale in very aggressively at the next fib target down. And you can see if you've got in one lot here, 47, one lot here at 43, two lots here, you'd have a 6 lot position from about right here at 41. And if you got out of it just somewhere up in here with about 14 pip win, you'd have over $600 in about 10 minutes. So that's why the counter trend signals are used. And once you see incredible momentum on the way up, if you get a pullback without that much weakness, very high probability buy here, here, and here, trading with the trend up, up, up. And you only need 10 pips a day to double your account on average per day. That's 200 pips a month, but it breaks out to 10 pips a day. There's 20 trading days in an average month, and you get net 200 pips a month. You double your account every 2 months using very low leverage. So this little buy right here that went up about 20 pips, this one went up about 10, this one went up about 30, this one went up about 10, this one went up about 8. Any one of those pretty much hit the daily probability. If you counted all the trades today, this one worked, this one worked, this one had a small win, maybe break even, this one had a slight win, this one worked, this one worked, this one worked, this was a little bit early, this one worked, this one worked, this one worked, this one worked, and this one worked. You can say they all worked except maybe this one here you would have had a loss, and you might have had typically when I take a trade I will put my stop right above the high, and once it goes one bar my way, I'm watching the momentum. You can see this move up here had a lot of momentum. It's starting to pull back without that much weakness. So you move your stop maybe in half, and you would have got stopped out of this with maybe about a 4 pip, 5 pip maximum loss. You would have got it back even on this small win right here, which also, as it came down, did not have that much weakness. The previous momentum to the downside was no longer there. So, you take what you can get. If it's 3 to 5 pips, or if you're lucky enough to get 7 to 10, so be it.